Thank you. Thank you all for coming. It's hot, and I appreciate the sacrifice of coming here to sit and listen. Thank you, George. My name again is Avner, A-V-N-E-R, Mandelman, so you'll remember it. And as George said, I recently published a book. I came here before the book was even published, so it's not a book promotion, but that's the book in case anyone wants to see it. Let me first introduce myself, and then I will try to assume that I know what you guys want out of it, and I'll tell you, and you tell me if it's not so. And then we'll do the plan. The plan today is to speak, first of all, what investments are. And after we know what investments are, I want to tell you what they are not. And after we say what they are not, I am going to try to speak about the elements of a company that you probably didn't hear much about. And that's what sleuths do. Sleuths are those who look for physical information, physical data. And after that, I'm going to have a little fun with trying to develop a literary theory which will mimic the efficient market theory. Try to see how you can forecast novels' value by doing math. It'll look exactly the same as what people do in math courses. But of course, it will be nonsense, and I think there'll be no other example that can show you why what many of the quants do is not very valuable. And finally, I'm going to give you an example of how to sleuth a company, and then I'll stop when I see people starting to nod off and open for questions. How is this for a plan? Okay. Giraffe Capital, where I toil, is a value tech investor. We are looking for tech companies that fell into what we call the value category. We are looking for extreme undervaluation. We look for neglect and a short of growth. The idea is that we are not much smarter than other people. We are okay, but if we only rely on our smarts, we can be 5%, 10% more than others. We want more than that. We are greedy. Over the last 8 years, since we began, the tech market, the NASDAQ, went straight south, and maybe today, negative 2% or 1% per year. We made 18% per year, slightly more now. In the Canadian fund, 21% per year in the foreign funds, which means we gave our investors about 2,000 basis points, 20% more than the market per year over 8 years. This is not bad. How do we do that? This is where I come to the part of where I think what you want. You guys want to make money, and you want to learn secrets how to make money. Well, there are no easy secrets. The only one I can tell you is probably what your grandma and grandpa and parents told you. You have to work hard, but in the right direction. And you have to, first of all, forget much of the unnecessary stuff you learned, and then do more of the necessary stuff. Unfortunately, the necessary, also the harder part, and the one when you get behind your desk and do real work. But we'll get to that. Once we do that, then I may go into a theoretical example of how you can do it, and you may think I'm joking at some times, but trust me, I am not. Okay. What investments are? Business has been compared several times to war. I mean, you're trying to take somebody else's money, he's trying to take yours. There are some ground rules. There's the United Nations who overlook everything, the OSC, or in the US, the SEC, and one of you is going to win. All of you are supposed to be playing on an even playing field. It's almost a legal term. All the information out there is supposed to be equally accessible to everybody. So, if everybody has the same information, how can you win? The efficient market theory that was started about, I think, 30 or 40 years ago says that you can't. All the information is available to everybody because everybody today has access to all the print and internet information, and the market is so good and fast and efficient, and so many smart people are in there. So obviously, the edge you can get is very, very small. And if that's the case, don't bother. Just put your money in the index fund and try to be as average as possible because it's the best you can do. I call it communism of the marketplace. You can't win anyway, so don't even try. Just try to be very average. If I would be Canadian myself, I would say it sounds Canadian, but it isn't. So what is the catch here? Warren Buffett, of whom you probably have heard, said if he could, he would endow some professorship in efficient market theory in universities so people would buy what he sells and sell what he buys. And I would love to do that too if I had his money, because it would be very productive. Those who buy index funds, in effect, are saying we can't know very much about any specific investment, and therefore we are going to buy hundreds of them about which we know nothing. So the only thing we can know is what we call the squiggliness of the price line. Prices go up and down, up and down, up and down, and they squiggle. What even more, at the beginning of the last century, 1901 and 1902, a French gentleman called, I think, Henri Bachelier, wrote a very influential paper, of whom you probably have heard, called La Théorie des Spéculations. And he showed that security prices fluctuate randomly in the same way that many other things in nature fluctuate, like gas molecules, Brownian motion. And from that, a big hoopla started. The first hoopla was in finance. The second hoopla, more justified, was in physics, because Einstein relied on the same sort of theory and developed his photovoltaic paper, for which he got a Nobel Prize, not for the famous theory that he came up with later, the relativity theory. So the fluctuation of security prices has a long and esteemed history. However, it also misled many people to believe that because security prices fluctuate, there is information in it. There isn't. Or there's so little that it doesn't tell you anything. Because for the engineers among you, I was one myself before I went astray, you would know that the price is what we call the exogenous variable. It's the result. The fundamentals, the things that go into making it, are called the endogenous variables, the causes. It's far easier to look at what's available, which means to look under the street light, even if there's no penny there, just because it's easy. So you can look at the price and do moving averages and do betas and gammas and alphas and deltas and all kinds of things. And you can even begin to think that you may get something, but you get nothing. Luckily, there are millions of people who do that and put money behind it. And those are people whose money you can take. And I speak with some experience. Those who buy billions of dollars worth of stocks in index funds, they are basically buying stocks about which they know nothing, but they think they do. And as Mark Twain said, more dangerous not to know or to think that you know, but you don't. So, if the efficient market theory doesn't work, what does work? For this, we have to ask a question which very few people really think about seriously, and that is, what is information? I don't want to go to all kinds of philosophies. I may go a bit later because I like it, but now this is a practical lecture. So information, in effect, is a lot of symbols. There are blips on a screen and squiggles of ink on paper. They're supposed to describe how the real physical world works. And the idea is if you can manipulate the symbols comfortably from the comfort of your home or office, you can get a handle on the real world. The real question is, how much of the real world can you capture in symbols and ink squiggles and blips? And that's a very deep question. I was just going to kind of float on the top of it. There are hundreds of people who dealt with it, and for us it's a very practical concern, because there are people out there who invest billions of dollars on nothing more than squiggliness of price line, and this is basically money out there ripe for the taking. Because if you know about a company more than they do, over time you can't avoid making money. I'm telling you, you can't avoid making it, because they think they know and they don't. Billions of dollars out there. Now, what is information? The Ontario Security Commission and the SEC see that information is documents and legal papers and prices and symbols. And they work very hard and diligently, and rightfully so that none of us can get more than the others or much before the others get it. However, before the symbol became a symbol, it was a physical fact. What the efficient market theory says, I have to grudgingly, kind of sotto voce, says they're probably correct in saying that you cannot get much advantage from symbols. But you can go out of the academic world or out of the office and look for the physical fact before it became a symbol. The common misconception in academia and also in Wall Street and Bay Street and Threadneedle Street and all the other places where money is being pushed around for profit and for fun is that you can do it with symbols because that's all there is. But if you can get the physical fact before it became a symbol and you keep your mouth shut about it, then you can take the money of those who don't know about it. Which tells you why investment cannot be a science. The purpose of science is something very noble. I should basically almost sing a hymn here. Science wants to discover truth and tell it to everybody so everybody is happier. Investment couldn't be further from that. Investment means you want to discover the truth and keep quiet and take the money of the suckers who didn't bother to learn about it. So by definition, anyone who does financial research, financial formula, financial anything in academia is trying to teach everybody how to take the money of the others who know everything that he or she knows also. By definition, it can't work, which means finance theories you learn are descriptive, not prescriptive. I always wanted to take the money of other people because I thought if I work harder, I deserve more money. I mean, I like good things. My kids like good things. If they want to get more good things, they should work harder. Let's see who can work better. So what I discovered a long time ago is that if you go out of the house or in the office and look for physical stuff, and there's a way of looking at it, then you don't even know how, but you start making money steadily, and then the most difficult thing is to keep your mouth shut, not boast about it. So what I'm doing here today, not boasting, I'm just telling the younger generation that you should also learn how to keep your mouth shut. So I'm going to try to censor half the stuff I'm saying. So first, if investment is war, you try to take the other guy or girl's money, they try to take yours. By direct conclusion, investment research is an intelligence operation. Anybody here familiar with the intelligence world, how intelligence companies work? Okay. There's 4 functions to intelligence operations. There are agents in the field that bring in data or information, exclusive information. There is the case officer, agent runners who run them, who tell them what they need. And listen to them because the agent may say, you don't need that, you need that because of something. So the agent runner, then there's the back office analyst, what the Brits call boffins, the smart Alex and Alexias who are looking at the information and come to the conclusion. And then they flow it up the line, and then you're going to have the trigger pullers. They are either the high command who know where to send the troops, or they are the politicians who know what to do without the other guys knowing that they know it. 4 functions in intelligence. The 2 below are called human intelligence. And then you have the analysts sit in the office very nicely, one finger up, they're drinking the coffee and the tea, and they think, and they have spreadsheets, and they have satellite pictures, and they think they're who knows what. But without the raw information from here, they're very little. The equivalent sort of picture in the investment world is fairly similar. There are agents out there who provide you information. There's somebody who connects with them. You bring it back to the office and you think about them and you analyze and you have theories and you have all kind of logic constructs and whatever. And you come to a conclusion, you give it to the trigger puller and you buy or sell. However, contrary to military intelligence, I'm saying contrary because I'm being gracious, many of them also are very deficient in the 2 functions below. In the investment world, the 2 lower functions are very deficient. There are very few agents out there in the field who tell you about what's really going on. There are very few who can run the agents out there who will bring you the information, but there are millions of analysts with MBAs and CFAs and PhDs, and they're sitting in the office very restfully, air-conditioned, they're drinking coffee, they can argue about the quality of the coffee, and they know exactly the PE and all the other stuff, and they have all the SEC documents by heart, and they know all the stuff on the internet, the ink blots and the screen blips. They know all the secondary, tertiary, derivative information by heart. And from that, they draw a conclusion, give it to the people above, portfolio managers, or their own private accounts, or the strategist, and they pull the trigger and they buy and they sell. Or they say we can't do anything and they buy index funds. The ones below, they're getting the kind of information that is in the real world a low status job. The real high status job are those of information managers. They have degrees, you have, tie, you have nice watches, you have Cross pens, you have Gucci shoes, you go out there and you are like an ad with a Samsonite briefcase in your hand. Those people are getting paid a lot because what they sell to clients is brain power. The fact is that brain power somehow can give you only so much advantage unless you are a genius. And this is not a joke, because some people out there, I'm told by George that you have seen here Mr. Khan, Irving Khan, with 104 years old. I mean, he forgot more than I will ever know. And Warren Buffett can sit in his office, and he does. And he just reads the value line sheets, and he somehow can pick up the winning stocks. It's like Kasparov playing chess against the whole world on an open board and winning. Unless you are a genius, you need some other things. And the idea that you can play chess against the entire world and win because you are smarter is very seductive. But I urge you not to be seduced by it. The real gain comes from work and having agents out there in the field, knowing how to run them, or running yourself and getting information yourself. I'm going to tell you how to do that, but before that, I'm going to take a little fun break of 5 minutes and tell you the scientific basis of what I'm going to tell you about. And if anybody falls asleep here, I'm going to just move back into the real world. The idea that you can translate all information about people or about the world of people into symbols and language is a very seductive idea, but it's wrong. What you're really trying to find out is how two groups of people, two companies, battle each other, and who will win. And the assumption you can get enough information about this from letters and language is basically the Turing assumption. The Turing Test is a very famous test named after Alan Turing, who was one of the code breakers, one of the earliest real boffins, the Second World War, who helped break the German code. And the question he asked was very simple. You have a wall with a slot in it. And behind the wall, there's an entity. The entity may be human, may be a computer, an AI. You don't know. Very advanced entity. You can ask the entity questions. You write the question on a piece of paper. You can write it in Sanskrit if you want, in Urdu, in English, or in computer code. And you slide it in, and you get an answer back in written language. And the question is, can you identify whether the entity behind the screen is human or a clever computer strictly by the written answers? And this is a very easy question compared to the question, can you identify if the entity behind the screen is a lying human, or a truthful human, or a trustworthy human, or a human who can deliver only you think he can? That's a very different question. You're transferring a question and get something back. And the answer is that you can't. To this day, the Turing question remained unanswered conclusively. I mean, there are websites that can show you 9 potential answers. I wouldn't even go into this. What is more important or more interesting to me is the constraint that Turing put on it, because Turing said you are not allowed to peek behind the wall, because you only want to see if you can do it by language. And for me, the restriction is extremely meaningful, because what Turing understood, I think implicitly, that if you do peek behind the wall, it's almost impossible to fake a human. Unless you have an android that not only looks like a human, but reacts, that will start nodding off when you're talking nonsense, or will blush when you're insulting him, or will rise up, or will give all the reactions that any human does. A computer that can flirt, can pick up girls, a computer that can react risibly to something else, in a way, the way that people value or evaluate each other when they give them capital. So the Turing question basically is an admission that you cannot shoehorn the humanly transmitted information into a channel that only contains symbols. I'm trying to simplify much of the math here. So the assumption that you can just invest based on printed stuff and ink-based blips is a wonderful assumption when it's made by the opposition, the people whose money you want to take. What the internet is today, in my estimation, is just a giant wall with a Turing slot in it. Information comes to you, you sit at the office, you go click, 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 moving averages, you read something, you do this, you do that. PEs, if you're a genius, you can make money, but it's extremely difficult almost impossible, because the information coming through is not even the beginning of the real information that humans transmit. So, is this such an innovation? The answer is no. There are other scientists who came with the same idea. There's the famous Eddington conundrum. He said that if you see an elephant, 2.5-ton elephant, as a point mass sliding down the grassy slope down angle alpha, where the coefficient doesn't so, you miss what you call the poetry in the situation. And you don't know if the elephant is aggressive or not, you don't know if he's going to try to stop himself, and there are many other such examples that the math doesn't capture much of it. But the advantage is in this. If you can get the real information, the human information, you can take the money of others who don't do it. Now, what is human information? Human people, I don't know, any kind, human people transmit and receive information in basically 4 or 5 channels. You have talking, which means hearing, you have sight, you have touch, you have smell, you have taste. The information you get when you talk to people in companies also has all the 5 elements to it. When you talk to a VP of finance in a company and you ask him how things are going, he says, oh, okay. That's information. If you only get his written response, how things are going? They're going okay. You didn't get even half of the information. If you sit with him with 3 others in the meeting and say, how things are going, you say, it's okay, and the other guy just roll their eyes, oh yeah, sure. You got information that other people didn't get. By definition then, if you limit yourself to the information on the internet, you only get the little tiny droplet of transmitted symbol that doesn't begin to contain what's out there, which means if you teach yourself never to invest unless you really see the people out there, the customers, the clients, the people in the company, you're going to get so much more information. Even without knowing anything about methods that I'm going through, you can't avoid making money. Now, what methods can there be in all this? Oh, where do you start? In my methodology, or basically the general methodology, you divide the information as resident in about 3 or 4 physical elements. We call them the people, the product, the plant, and the periphery. We lump the last 2 together. The people are people in the company itself, people of the suppliers, either of products or of services, the customers, and any of the other people who are around the company. Every one of these people have information that can never make its way to the internet because some of this is by an eyebrow, or yeah, if only I could tell you, this sort of thing. The more of this you know, the more you can take the money of those who don't. The product itself, you'll be surprised, or maybe not, how few people really look at the product the company is selling before they buy the stock. Just pick up the product. Is it good? Is it shoddy? Is the pizza stinking, or is it really good pizza? Is the microchip still, the piece of sand on it from the casting, or is it looking very good? I mean, look at Apple. If you look at their product, they glisten. And finally, you have the plant and the periphery, where everything takes place. And when you go to the company's plant and you go all around it, you can pick up stuff that everybody around the company knows. But nobody dares tell, because much of the stuff that's really happening in companies is unprintable. In many cases, they buy the product because they have to. Somebody's buying a product because it's really his brother-in-law who just got married, so they throw him something. Nobody will tell you. Or the president is now on his 4th wife, and she just ran to Vegas with a ski instructor. So he's going to be in the position for the next 3 months or 6 months. He'll never run the company. Everybody in the plaza knows it. If you're an investment scientist, you don't. The more you know about the company and the people and everything physically, the more you can take the money of those who don't. And when you talk about people, the question is, how important are they? And how can you evaluate what they do? Again, I don't want to go too much into it, but in intelligence organizations, there are people who are taught how to get information from others. There's a course being taught called Cold Reading 101. Almost as a joke, gypsies who read your palm and try to guess what you want to know, they can read you very, very fast. They can guess the life experience. For example, if you have somebody who's, let's put it this way, if a girl who's blonde, blue eye with a pert nose and looking very good, she has a different life experience than somebody who is about 300 pounds and very smart, but nobody ever looked at her. These two different persons have the same human worth, but they come with different background, and you approach them differently. If you want to know something about the company, I will let you do anything you want. You put $100 in the pot, I'll put $100 in the pot. You do everything you want, any database accessible to you. I will go and take the president's secretary for dinner or lunch, 3-hour lunch. At the end, I'll take your money. She knows everything. She's about 62 years old. Nobody ever talked to her. She's dressed very severely, but she has very nice shoes on which she spends a lot of money. She has a little dog, a little pug called Choo Choo, and she's reading Harlequin romances. When you know this about her, can you get information out of her or can't you? And if you can't, you don't belong in the business. What I'm saying is that as an investor, you're not a scientist. You are a street operative. Those who can be street operatives legally and ethically, because you have to be very careful, you can take the money of those who stay in the office unless they are geniuses. There are geniuses out there. But for those who are not, for those who are borderline geniuses, going out there and basically picking up information like you're picking up girls or picking up guys and going out the real world and seeing what really goes on out there, you'll be amazed what's available. In my book, I give 2 or 3 examples, and they are very softened, and shall we say they are fictional. There's no connection between them and the real world. I want to stay on the legal side, but things are being done out there which are real things, real stuff, not spreadsheets. You have to know the spreadsheets. You have to know the SEC documents. You have to know 10Ks, 10Qs, read the CEDA and the SEDI, and you have to know all the stuff. But beyond that, you want to take the money of those who do nothing but. Now, the one thing I want to say something about is the importance of people. How long do I have, George? I'm okay, okay. The importance of people. There may be 1 or 2 among you here who is going to make $500 million, $250 million, maybe nothing, or maybe more than that. It is very difficult to know which one that is. If you can identify that person and say, I'm going to give you right now $1 million, for 5% of your earnings over the next 20 years, some will take it. There's 1 or 2 among you that shouldn't. If you can identify who this person is, and you have ways of identifying it, you got it. Now, how do I identify which people are the ones worth investing in? And that's the $64 million question. It looks soft and fuzzy, but it isn't. There are ways of identifying good people, and over time you develop the ability, and it's nothing more than gut sense. Now, which leads me to what I call the cold reading people, but in a structured way. I mentioned before that there are 4 channels of information. When you talk to anyone, they transmit information in very different ways. The voice transmits the content. You say something, and there's the content you can write on paper. There's the quaver in the voice. There's the confidence. There's the shrug of the shoulders. There's all the other 1,000 things that tell you whether this person is telling the truth or not. How does it tell you? You can't say, because it's something in the gut. If all the channels of information are saying the same thing, professionally it's called they are congruent. If some channels are saying different things, it's called incongruent information. It's part of the world of psychiatry or hypnotism, in which the therapist is trying to see if the information he or she is getting is true one. In many cases, you don't know, but you can get a really good sense, and you don't know why you got the sense. Somebody looks you in the eye, and very meaningfully, Miss Marple says that everybody, anytime somebody looks very confident, looks her in the eye, you know he's lying. Why? Because 5 other people who did that all lied. If you can identify who lies, who's not, who is trustworthy, who is not, you can take the money of those who don't even bother. And this sounds funny coming from somebody who was an engineer and used to build model airplanes, and I used to work in a nuclear cyclotron in British Columbia, and I know math and I love it. But the real edge is in understanding people. To give you the full measure of it, from modern times, Chrysler without Lee Iacocca was bust. Chrysler plus Lee Iacocca was a billion-dollar business. Steve Jobs was kicked out by John Scullin, whom he brought in. I mean, Shakespeareanly, he brought him in and the guy kicked him out. He came back into Apple. Apple blossomed. One guy in jeans and half balding and had cancer, he overcame it, and he ran the company, and he's not an easy man to work for. Doesn't have an MBA, I don't think he has much of university education, and he managed to create such a huge company. And also, when he was kicked out, created Pixar, one guy. If you saw the movie Alexander, I don't think it did it much justice. In the real battle, Alexander went against Darius, and he came with a bunch of people from the Peloponnese, and he basically came with people that didn't really know if they can stand against a huge army. And Alexander rode before them in the horse, and he gave one of the shortest speeches in history before a battle. What he in effect said was this: you are free men, these guys are slaves. You're fighting for your homes, these guys fight for money. You always won before, these guys at most drew. Not only that, these guys fight for Darius. You are fighting with Alexander, go and kick butt. And this speech galvanized the, a few thousand of the hoplites, of the people that he was leading, and they kicked butt. If you had a guy like that leading a company, you can identify him or her, you can make a few billions. The thing is, you have to get your mind away from just the numbers. You have to know the numbers, but you have to make sure you understand that people basically make the numbers. You go out there, and you try to sleuth them, you try to check out all the stuff, and leave yourself open, and eventually the gut sense will come. Saying all that, how do you find the cheap companies on which it's worthwhile to do all this? I started by saying that Giraffe Capital is a value tech investor. It's very nice to be very fancy and find out everything about the company. But if you started on a company that is not very cheap, you can be building yourself into a trap, because once you found out all the stuff, the temptation is very large to say, well, the price is not yet cheap, but I did all this work and they're going to be okay, let's wait, let's have patience, the magic word, patience. Well, we have patience, but I'm quoting a guy called Evelyn Waugh, said, to a point, up to a point. We can have some patience, but the trick is not to put yourself in a position in which you have to use too much of it. So how do you look and find companies that are ripe for this high-powered sleuthing? I don't want to go into all details, but some of this is pretty time-consuming work. The cheapness criteria are known to many people. There's the Graham and Dodd methodology. There's Ben Graham that gave you the methods of lower than working capital, and there are other ways. Once you go through all this, one of the methods will strike your fancy. And it sounds almost too cute to say it, but each personality gravitates toward a cheapness method that fit to it. My business partner also invests on the side in oil and gas businesses. He likes it. He has a good feel for it. So if you have a field that died before, but he knows some geologists who know that there's something in the area, and he trusts them, and he knows the area, for him it's an undervalued situation. For us, we have invested in a company called Mossad. The stock was about $5. And I will give you here a little flavor. I didn't plan to, but it kind of leads to it, of how we do the sleuthing. Mossad is a company in Canada that started by reverse engineering chips, which is sort of half legitimate, half respectable occupation. It's okay. They started by reverse engineering chips and then edged into designing new chips. And they began to have patents which they defended ferociously, which I like. They battled for the families, for mine, if I'm a shareholder, and they did the right thing. Over time, the patents began to dissipate, but they still had a few, and the stock went down to about $5 a share, something like the cash per share. And all they had was IP, intellectual property. The value of intellectual property is very tricky. If the company invested $100 million in it, they may have blown all of it, or they may have not. To know if they did or didn't, you talk to engineers. If you want to know if these guys are good or not, you talk to people who are their peers. It's like trying to see if a chess player is 2,300 elo points or 1,900. I'm about 13, maybe. My son is 1900. But to know the difference between 2300 and 1900, which is a club player, it looks the same, but you have to talk to a pro. So if you talk to people who are playing chess or playing microchips, who design them, they will tell you which guys are good, and will say they've been very, very good. Also, legally, they've been terrific. When the stock came to $5, they had an IP portfolio that in the past generated about $300 million of royalties from Sony, from many others. And because the royalties were tested by the court, there was a market valuation. You have to know how the court system works, and it is sort of mafia town out there. Judges don't want to decide. Judges are told by the state to press people into settling, which they should. But if you know that, anything that happens, you read in that context. What happened was that Mossad went and sued Samsung, were the ones who stole their patents. When they sued them, the stock went down to 4.5, like below cash, and the fund started. Because if they would win against Samsung, the stock was worth a fortune. It was worth our while to start sleuthing. We found out who are the lawyers on both sides, all the cases they've done before, who is the judge on both sides, who are the police people in the town in which they did the suing, the people who work in the court system. In every courthouse, there is what we call a Gladys, a lady who is an old lady who stamps all the documents. She knows everybody and everything. She's old, she's decrepit, and she knows everything about everything. She knows how to talk to you. If you go talk to her, give her coffee, she will tell you. There have been two judges. The younger one looked very harumph-ing and pompous, but he got advice from the more senior judge. And there have been two other people in the court who basically, like in a family court, there are social workers who make decisions, the judge that he knows, and he stamps them. If you know how the court system works and you talk to them, you have an idea what's going on. And you can read a PACER, which are the documents published on the system that any lawyer around here, they would know. And if you go to the town and you go to Main Street and chat to people in the court system, you will know so much more than anybody else. You only have to know a little bit more. We found out the number of things and we began to invest. The stock went from 5 to about 20 or 25. At which point, analysts began to latch onto it, and with kind of mumbly sort of buy, sell, hold, reduce, add, overperform, outperform. And at a certain point, the stock rose about 30. There was doubt whether the company would get the full measure of what they could get, because the judge had a measure in the market of $300 million that he could point to and say, I think that that's what they deserve. The judge doesn't make a decision that could be overturned on appeal. But at that point, the question was, are they going to get the extra time? Gladys, I'm staying on the fictional side, and the court system said, no way they're going to get recalendared, because the court system is stuck. The judge will throw them out, and that's what the judge did. The judge said, take a discount, get off my courtroom, take your money and go. And the stock went from 36 up to 25. He bought some more, so 30 went home. Now, we also make mistakes, but the idea is that even in a case depending on the legal system, it's people. You go out there, give them coffee if they like coffee. Give them latte if they want latte. You have to know what they like. You talk to them. You ask them about their jobs. You ask them about their life. You learn what they are, what they're like as people, and they will tell you. So next time you call them up, they will answer you. The people who are working at the Starbucks across the plaza from where the company had its headquarters, they know where the salesmen meet. They can talk to you. The salesmen themselves go there, sit beside them, tell them, you invest in the company, how things are going. Say, oh, they're going okay. Yeah, fantastic. I don't know yet, next month ask me. Go with their bowling. If you're an intelligence operative, you're trying to find out what's going on. You're talking about individual people in the organization. Companies are fiction. Companies are a bunch of private people chasing private cash and private glory, doing together because that's what they can get more. Penetrate the company fiction, go to individual people. That's what the mafia does. That's what intelligence services do. Do it yourself, but do it legally and ethically. If you have any doubt, ask your conscience, ask your lawyer. But if you do that, if you go and try to get human information from the people who do the stuff, nobody can touch you. All the people in the offices who just buy and sell based on the numbers, they may hit a good streak. But if something starts tumbling, they will get caught. Giraffe basically made its money by not losing. before the crash, we were heavily into cash. We have been slightly negative in the 2 years of the crash. Slightly. The market was down 30, 40% every year. We've been there in cash. There was nothing to buy. We did some shorts, but not enough. There was such a huge discrepancy between the real world, what's really going on out there. Like a mass hypnotism. It was mass hysteria. You can be immune to that if you go and look at real people. Now, I wanted to tell you about the ridiculousness of efficient market theory. I don't think I have to. Is there anybody here who plans to do mathematical investing? Something like hedge, arb, okay? Some of it does work if you do it very fast and rely on computers. People in the office next to us, they are investing only their own money. And they rely on extremely fast computers. And what they do, they are hedged arb traders. They will buy an hotel in New York and short it in Canada if there's maybe 1 penny difference, because they know on 1 million shares, 1 penny difference, like 10 grand, if they buy today and settlement is tomorrow or day after tomorrow, and they give the money to Gladys and the CIBC and they get the cash and deposit it, they're going to get Tuesday morning, they get 15, 20% per year. But they have to know the system exactly, and they are basically a big Hoover machine that's hoovering everything. And their edge is in speed of computers. I think that anybody that goes for investment based on edge of speed is possibly doing the wrong thing, but it's only an opinion. Because if you find something extremely fast, for all I know, you can hoover more inefficiencies, but you have to keep running more and more. My business partner, Mark, always tells me I'm working too hard. Not really, but I like to work. He says, of all you're doing, only about 20 or 30% gives you what you really want. All the rest, so-so. Well, take 10% of your time and sit back and do nothing and find out what doesn't work. Let's spend a quarter of your time trying to avoid doing what doesn't work. Do only what really, really works best. The thing is, when you have so many bright minds around here, many of the ideas you come up with are good. But how many are not good enough? If you want to have a lot of return, let's say even the lowest stock you can pick up will be 15, 16% per year. How can you have the discipline to only to pick the ones that are going to give you much more than that and have the fortitude to give up the stuff because it's not good enough? This, I believe, my own belief is that you get via people. By talking to people and going out there doing physical work. I can almost hear my voice speak now, so for you it must be almost tiresome. I hope it's almost. I'll give you just a case of how we start sleuthing, and then I'll maybe open it up for questions, because I may have gone to a direction that is not exactly what you want to know. Most people who look at a company start with the company itself. The product, management, the balance sheet, what they do, where they are, the market, the niche, the industry, all the rest of it. It's okay. We do it backwards. We start with the customer. For us, a company is only a mechanism of getting the company's customer money into my customer's pockets. Anything in between is a mechanism. So if I look at company XYZ, and they are selling a gizmo to a customer who pays them $1 billion, I want to get as much of this money into my customer's pocket. That's what they pay me for. So if the customer isn't worth serving, I don't care what XYZ does. I don't care how good the gizmo is, laser, schmazer, I don't care. Some customers are worth serving, some customers are not. And that's something that in many schools almost a heresy, because we are all people and all of us deserve equal chances, but they shouldn't deserve it for me. Some customers don't behave well. If you sell to a committee, I mean, that's an organization here. I'm sure, George, you try to sell ideas to a committee. Other people try to sell ideas to your teammates. If you need to have a consensus before a decision is being reached, you can grow all in the meantime. If you are working for a company or you try to invest in a company whose clients are committees, you are asking for it. Companies who sell to big banks, companies who sell to defense departments, to governments, to foreign governments, to anything with an organization, usually end up wasting their shareholders' money to finance the customer bureaucracy. Not with my money, they don't. The ideal company is the one who sells to people who have an individual personal interest to make the buy decision, even if it is the expense of the boss and the employer. In my book, I give an example of a company that grew they sold $80 million of revenue for $1.4 billion in the CRM business. If you are selling to a specific customer who's saying in his own mind, I am making 100 grand a year plus 50 grand in bonus. If I buy this thing, which the boss will pay for, I'm going to get 150 in bonus. The boss may suffer. What do I care? Bang. Fast decision, you have fast cash flow. That's a business. If you go to a company in which you have 20 people around the table, a committee, all with MBAs, all the CFAs, and they have to start doing spreadsheets, giving you the boss for approval, getting back to you, they may still be buying the most sophisticated machine in the world. It is not a business worth doing. So what we do, we start with the customer, and we define what customer is worth serving. And this time spent is the best time spent to make money on. There are people out there who serve the other kind. You shouldn't be there. You're above that. People who are cordon bleu chefs, who can make an omelette dance. If they go and serve the Salvation Army, they are going to do a very nice human thing, but in their spare time and not as a business. Especially if they have to make the government pay for it. They can't possibly pay them for it. Go to the Ritz and show what you can do there. They'll pay you. They'll give you even tips. If you are cordon bleu chefs, the first thing to see is who are the ones who can pay you, either for your work or if you're working for a company, the customer who will pay you, who can pay fast. Pay quickly, pay a lot, and be happy. One of the signs that the business is wrong is the customer is ecstatic. Customers shouldn't be ecstatic, should be only happy. Ecstasy means you are underpricing your product. We have other rules that we follow through. But we are very money-minded as value investors. And what we do is almost the opposite of what almost all the others do. If you had Francis Chu and if you had Eddie Michael, they probably start with a company, but they're terrific investors. Terrific. And we all come somehow in the same area, like all the roads lead to Rome. But we start with the customer. We want the money. So some get it easily, some don't. And we find that it's easier to get it if you are going to get information physically. And we get information that nobody else ever gets. And when you do that, the most difficult thing, as I said, is to keep your mouth shut. Because if you find it, the urge to brag is irresistible. You went out there and you talked to two salespeople, low-level salespeople, and they just came from Brazil. And they talked to a large company out there. And it was lovely. And they can't wait to go back, which they will next month, because the contract is so big they wish they could tell you, but they won't, because they're honest people. And you go back to the office, you say, the stock is trading for about a market cap of $20 million. The contract is 100. Nobody cares about it. The company is forgotten. Why don't I go to Brazil and check? If you do that and you keep your mouth shut about it, you can make some money. I'm saying it sounds like a joke, but the urge to tell how smart you are, how much you know, is fairly large, because once you make the money, you want to hint. That's what you should make use of when people in companies hinting and bragging. You get information nobody else ever has. Now, saying all that, you have to know the numbers, you have to know the technology, you have to know the company, you have to know the people, you have to know all the stuff. I'll mention one last thing and I'll stop. And that's to get all this information together, we use what is called star maps. Intelligence organizations have huge databases in which they collect all the information and they keep track of what they call persons of interest. If any bad guy in Jakarta met somebody, he's being photographed immediately, and if you identify as a radical student in university in Hawaii, the local authority is being notified. All the data of who meets whom is collected. The market doesn't do that. People don't know all the stuff. But you can't begin to simulate by having what they call a star map. You put down a piece of paper, all the people in the company. The important people, where they live, where they went to school, what they do, what the hobbies are, where they worked before. And then you start putting line to see, oh, the main buyer lives across the street from this guy. They went to IBM in the same 2 years. They both go sailing together. The competitors all of a sudden, they got another salesperson. He's also a sailor. He lives on the same street. Maybe the contract is not as secure. The physical information gives you insight, otherwise you wouldn't get. And beyond that, it's all hard work. And you make some money, you give to charity. and take care of your family, and you try not to brag. If there's any questions here, I'll be happy to answer. I try to be very concise, and I probably went a little bit less than the time, but you tell me. Thank you for your patience and questions.